All right, what is going on, Discord and YouTube fam? And welcome back to another edition of Top Down Analysis with me, T. Hobbs. Today is July 27th, 2025, year of our Lord, and we will be breaking down the analysis for four instruments and the volatility index. So it's going to be a long video, so I will break it down into chapters, but without further ado, please make sure you tip the barbers, aka hit the like and subscribe button, turn the notification bells on so you get notified every time I go live and or put out a video. That being said, we got a jam-packed week of news, earnings, information, tariff expiration dates, all type of stuff that we got to talk about today. And I did a special analysis today for gold futures as well. I don't know if I'm going to add it to my regular analysis, but this week I'm going to be breaking down gold futures because it ties in with my overall analysis on the indices. So I'll break down that as well. So without further ado, let's tap in right with the S&P 500. And there's some things I want to talk about with the S&P 500 before we go right into it. And the first thing I want to discuss is that the fact that we're moving into the month of August and September. Historically, the month of August and September is one of the most bullish or bearish months out there. Doesn't mean it has to happen, but it got me thinking, right? So why is September and August one of the most bearish months out there? It's because of tax harvesting, right? Essentially, if you're not familiar with what tax harvesting is, essentially toward the end of the year, portfolios need to be balanced out, i.e. they want to take losses, right? So in order to flatten out their capital gains tax, they end up doing tax harvesting and selling things that are at a loss or putting things at a loss so that they can balance out their portfolios, right? So those are two reasons why I believe either August or September is going to come in very, very bearish. I'm not saying right here at this point, but there's some other things that I wanted to point out prior to moving forward. The one thing I wanted to talk about is the monthly candle, right? We see the monthly candle is about 4 days and 4 hours away from completing, and we're already at the highs. We're above all-time highs. We're finishing at the closes, but the monthly candle doesn't really tell the story that I want to talk about. So let's drop down to the weekly time frame. On the weekly time frame, what you'll notice, right, is that we're pushing higher, but the percentage in which we're moving is very, very low. I mean, you look at the candle here on Monday, June 30th. On the week, we're only up 2%. We go over to the next candle, right? We go over to the next candle, weekly candle. These are weekly candles now. We're moving 1.4%. We go over to the next weekly candle. It's barely the same, right? Point being is that we're running out of steam at these highs, right? It doesn't mean that the market can't chug along higher. Definitely can. But there's some similarities of what's going on. I want to take you through some of those similarities if you got a little bit of time. I'm only going to do it on the S&P 500. And then I'll get back to the regular scheduled program. And I'm gonna bring back the top-down analysis. And like I talked about previously to start the video, August and September has notoriously been one of the bearish months, one of the most bearish timeframes in the market. Whether July, August, or September is the most bearish, even when they're not that bearish, they tend to lead us into what seems to be the top. And I'll give you examples of that via the charts, not just words, right? We go all the way back 10 years ago, right? We go back to 2015, August 2015. We dropped 13% when August 10th, right? Right in the beginning of the month. We go all the way back to the next year, September, right? August brought us up into September 2016, the middle of August, the market dropped 7.4%. Here's one in 2017. This is an outlier, but it ended up bringing us into February, and we had a very bearish February, right? Then, and you know, you could say this didn't happen, right? It's not going to happen every year, but this is 10 years of data, right? We go into 2018, October, September, August, September, right here, September 17th. We crashed 21.39% in 2018. We go to the next year in 2019, right? We're up inside of the end of July. Right at the end of July, we pull back 8.38%. Then we had COVID that dumped us all the way back down to this level here, right? And then we come up again inside of the next year, 2020. We pull back 10.84%. We keep going, right? We go into 2021. We only pulled back 6.3% in September, but guess what? This takes us to the top of the market. We start the year and we start a bear market for 2 years, right? We go into 2022. Again, August of 2022, we pull back 20%, right? We come into 2023, right? We got July of 2023, we pull back 11.505%. We go now into last year, August, July, right? We pull back 10.5%. For me, sometimes it helps to see things in like on the chart versus reading it. And right there, you can see objectively for the last 10 years, minus 1 year in the last 10 years, every single August, September, October timeframe is when we essentially get a pullback. Now, I'm not telling you to just start shorting the market because I'm not about to do that, right? I'm going to wait for the structure to lead me to that direction. But it's certain things you'll start to see, and I'm not going to go through that in this video. But what you'll see is when you start measuring, when we get to these highs, it's the same thing that happens. The S&P drops down to about 80-point weeks, 1.2%, 2%, right? And then we get a major dump. Catalysts that could lead to that dump are on the way. So we'll talk about those in this video. Let's drop down to the daily time frame after breaking down the weekly now. Looking at the daily time frame, again, it's more of the same. We're getting consolidation at the highs, and then we're rallying up out of this consolidation. As stated in the weekly and monthly candles, however, the rallies are getting weaker and weaker, right? Can they continue this pace? Absolutely, right? They can absolutely continue to be irrational much longer than you can stay solvent. So don't be a hero. Wait for the break of structure and the change of character. Ultimately, the nod goes to the bulls on all time frames. I could sit here and overanalyze whether this is the top or not, but I'm not going to do that. I'm just going to give you objective reasons why I think a pullback at the very least is imminent, right? So we drop down to the 4-hour time frame, and let's go over some of the levels that I have on the week, right? In addition to that analysis here, or the 10-year analysis, I actually did a real analysis, right? So we come down to the 4-hour. We start thinking ways that price can get delivered if we're going to be bearish. Well, obviously we're at all-time highs, and people will give you Fibonacci retracements and they'll give you Fibonacci expansion. I'm just going to give you data, right? And nothing changes whether there is supply to the left or there's no supply to the left in my data, because my data is based off things that have already happened. The levels that you see here on the weekly projection is based off the last 6 weeks of data, right? Why do I use the last 6 weeks? Because we've been consolidating for the last 6 weeks, right? So I want to make sure I'm getting proper measurements based off the consolidation or the expansion of the consolidation. So based off that, we're looking at about 2.24% plus or minus green or bearish. I do not care if it's bullish. I don't care if it's bearish. I care to be on the right side of the price when it's time for me to trade. All right. That being said, if we're going to be bullish, you want to see the market pull back, right? You want to see it come down and retest lows before going up higher. Well, what do we have? We have the chessboard low here, right, at 64.10, right, give or take. I'd be looking for the market to pull back into 64.10 and then rally up 2.22% into 65.5250, right, at the high. And then the 1 hour fair value gap here right next to the weekly fib. If we pull back into that area at 63.75 through roughly about 63.70, then I'm looking for the market to rally up about 2.24% into 65.1250, right? Secondly, if we want to be bearish on the week, right, then what do I want to see? I want to see that same minus 2.24%. I want to see the market rally up to come down. If the market's going to rally up, then we have an ADR of 64.76, right? Or I'm sorry, 64.56, right up here at these highs, right? 64.56. I'd be looking for a push down about 2.23% back into the in wall that sits at about 63.32. So the low of that, or that was from the high of that ADR. I'm sorry, that would be from 64.76 down about 63.32. From the low of the ADR at 64.54, then we'd be looking for about 2.24% down to 63.10. The 8-hour demand zone or 8-hour fair value gap that sits here is a very good target for price. But again, we don't have to pull back. We can just keep going higher, because the higher we go, the more people are going to try to short it early or try to time the top. And it's just going to be easier for the market to continue to rally higher. Remember, if you're not a buyer up here, you soon will be. The higher the market goes, anybody that's selling the market, in order to get out of their position, they have to be a buyer, right? That's why when we get to all-time highs or blue sky territory, it's easy for the bulls to keep pushing, because they know people are going to be trying to sell the top or time the top. I strongly suggest you don't do that. I strongly suggest you just continue to watch structure and watch for a structural break on the higher time frame, right? I.e., we get below something on the weekly or the daily time frame, and then wait for that retest to confirm the more downside moves. All right. So that's it for the S&P 500. Let's move over to the Dow Jones. All right. All right, moving over to the Dow Jones here in the bottom right. What I'm looking at on the monthly time frame is very, very similar to what we've been saying this entire time. Bulls are in control until they're not in control, right? And right now, they have not unleashed control. We got strong buying at the higher low here, barely inside of the previous month's candle. We broke that month's candle high, and then we ran the all-time high. So now, officially, 3 out of the 4 big indices, right? And that being the S&P 500, the NASDAQ, the Dow Jones, and the Russell. I don't think the Russell's made it to all-time highs yet, but 3 out of the 4 have all made it to all-time highs. That is a sign that we're almost there, right? Extreme greed is when all 4 of them, that's when we'll officially be at extreme greed, right? Where I think we're like a 74, 75 out of 100. We'll officially be at extreme greed when all 4 reach all-time highs. And just listening to the meme stocks and stuff like that going off, that means that if the meme stocks are going crazy, the Russell's probably getting ready to go crazy too. So once that reaches all-time high, we will be in extreme greed. Doesn't mean that the market can't stay there. It just means historically it doesn't, especially with these months coming up, right? But maybe this time will be different. Maybe this time will be different, okay? We look at the weekly time frame. We got a pullback, right, into structure, a rally above said high, right? No real selling at the highs, just nice balanced price action at the high. Wise man once said, consolidation at the high is never a good thing, right? It means that, it's never a bad thing. It's actually really good, right? It means the market's consolidating and getting ready to break above highs without the need to come back and find sellers, all right? So the nod on the weekly time frame definitely goes to the bulls yet again. And here's where it gets a little choppy for the bulls, okay? When you look at the daily candles, we had this bull flag come out of this area, right? Which is strong, that's good, right? But now inside of here, we've had 2 back-to-back candles just sit inside of that particular candle. If you're a bull, you want to see them rally up and create this nice bull flag for continuation back to the upside. We'll talk about those levels when we come down to the 4-hour. But if you're a bear, maybe you smell a little blood here. I wouldn't bet on it, right? But maybe you smell a little blood here just due to the fact that this candle wasn't able to make a new high. This candle swept the low, but again, we closed inside of the previous candle, which is inside of the previous candle, which to me, if that candle's low hasn't broken, then we're just bullish. Do yourself a favor, mark out 44,777 on the Dow Jones, and above, look for buys, and below, look for sells. You're welcome. All right. Let's drop down to the 4-hour time frame, and let's go over some of the levels that I discussed previously, or that I have on my top-down analysis. All right. So again, I know we're at all-time highs. What do? Remember, the market is just data. It's just one big math problem. That's all it really is, right? So if we're looking at the math tells us over the last 6 weeks, we've been moving plus or minus 2.7%. So I'm just going to continue to draw that math on my chart, whether that matches up with a supply zone or not, right? It's math. I want the math to math. That's it. So therefore, we have a resistance zone here on the 1-hour time frame, right? And we have a data high for the week at 2.7% at 46,022 and 46,171. If we are to trade higher, I want to see the market trade back down first. What's beneath us? Fair value is daily fib, right? Chessboard low, which is my own personal fair value. But we have daily fib and weekly fib, right? All of this sits above 777, which lines up with my thesis of looking for buys above this level, right? So what I want to see is a market pull back into the daily fib, right? travel up about 2.68%, and rally up into 46,171 from 44,972. If we trade down a little lower, I'm comfortable with pullbacks as long as we hold above the equilibrium or the weekly fib at 44,829. And then I'd be looking for a rally up into 2.7% or 46,022, right? To the downside, the minus side, right? We do have this falling wedge here that formed, but we weren't able to break the low. So do I think that we'll hold this resistance? I mean, we might to start the week, right? So we rally above this resistance or get right into it and reject. And then we start to come down in preparation for earnings on the week, right? We could come down about 2.67% based off the last 6 weeks of price action. From the 1 hour resistance zone, we'd be looking at about 43,987. From the daily fib, we'd be looking at, which is the next fair value level, a gap down would facilitate that. From 44,972, we'd be looking 2.68%, which takes us back down to the 8 hour fair value gap at 43,765. Now, I won't go through the weekly time frame and show you like the different percentages and all that. I only did that for one instrument, but what I will tell you is if one of them starts to fall, they will all begin to fall. But again, nothing on the higher time frame is screaming that, but the history of the market is screaming tax harvesting is on its way, right? And people will start to sell sometime over the next 3 months, right? 2 to 3 months, in my opinion, right? So the market's done it. We just went through 10 years of data on the S&P 500, and we saw the market not sell off once, right? So that data is not going to lie to you, right? Like the market repeats itself. It's math, right? It's a representation of human behavior, right? That being said, let's move over to the NASDAQ, right? And again, we got the same thing going on. This is enough to trap any bull, right? Like any bull. Everybody that's looking at this monthly candle is thinking, ain't no way, if you're bullish, ain't no way we're coming down. But there's a lot of information that's about to hit this market, right? This week is going to be probably one of the busiest weeks we've had all month or all quarter, right? So we'll see what happens. Again, I'm leaning more toward being a bear ultimately, but not based off the structure that I'm seeing right now, just based off the history of the data inside the market. So I'm not going to front run that thesis. I'm just going to wait and see, right? But the market is literally telling us, if we just look at, the weekly time frames, you measure these rallies, right, after consolidation, and they're just weak, right? They're a dull market. And eventually dull markets will keep grinding up, but eventually they're going to meet their match. Somebody's going to start selling this market, right? Whenever some small amount of fear enters this market, the market will start coming down, along with the fact that I mentioned earlier, tax harvesting is on the way. It's a real thing, right? It happens. All right, looking at the daily time frame, again, nothing to write home about on the NASDAQ, except for the fact that, we created a volume imbalance here, and we've just been holding inside of that volume imbalance, but we're not getting explosive moves off these imbalances. So if I'm a bull and I want to feel comfortable, I want to see a huge rally. But to be honest, if I'm a bear, I also want to see a huge rally. So it's almost like the news that comes out this week can be a catalyst, but I don't think that catalyst is going to stick just because of the time frame in which we're going to get these catalysts. So just do yourself a favor and study the big stocks that just reported. Go look at the Netflix of the world. Go look at the Intel. Go look at the Chipotle's. Go look at all of the big stocks and see what they did after their earnings this time, right? After their earnings, they got huge rallies, and then all of a sudden, a straight curve down. Does that mean that their earnings were great, right? Does that mean that people don't value them anymore, or they're selling the news now, right? As opposed to buying the rumors, they're starting to sell that news and trying to trap retail at the high. So just be smarter and lean on the data of what has happened, right? All right, let's break down the 4 hour time frame before I talk and waste up too much of the time. Let's go over and look at the plus or minus on the week. We're looking at a plus or minus of about 2.55% over the last 6 weeks on the NASDAQ, right? If we are to go higher, we need to pull back inside of the weekly fib. We don't need to, but that's what I would like to see. I like to see us pull back into about 23,292 and rally the market up about 2.5%, 0.55% into 23,885. Man, just every time I look at these projections, like these numbers are crazy to be way up here. It's crazy. But anyway, yeah, so we can look at 23,885, right? And then from the previous day high, if we're just to gap up and go, we're looking at about 2.53% into 24,069 from the previous day high. Now, if we're going to be a bear, we need to trade up first. And because we don't have levels, we use data highs based off calculations that are easy to make. It's literally just an average. That's all you're looking at. All right. So the first data high is here at 0.91%. The market continued to struggle with this level all week long, right? We drew this level out last week on our top-down analysis, and it's still acting as a ceiling for price. We tapped right at the bottom of it at 23,076. We have an ADR of about 0.83% moving into Monday. If this ADR is to hold, then we trade up to that first, then I'd be looking for the market to trade back down from this ADR 2.52% into 23,031, which is also a huge daily demand zone and a nice strong gap here. I'm not sure if this is an in-wall. Yeah, this is an in-wall, right? A nice strong in-wall down here at the 22,900 area, right? We also have monthly settlement there as a target. So if the market can't get above the previous day high, then I'm looking for it to trade back down 2.53% into 22,882. Again, tapping into that in wall, tapping into the daily demand zone. Everything is down here and monthly settlement is down here. This will be a really nice pickup for price to pull back to. So we'll see how it delivers, if they want to continue to grind or if they want to go ahead and drop the market down first to get that VIX pumping so that they can move it back up a lot easier, right? So overall, I'm more bullish than I am bearish. I'm more bullish than I am bearish on the breakdown of the structure, right? But as far as like the time frame of the structure, I'm more bearish than I am bullish. Now, moving over to things that support my thesis. Before I go down to the VIX, I want to talk about gold, right? The reason why I want to talk about gold is because the gold has been acting as a fear and greed index all by itself, right? Something significant happened on Friday in regards to the gold chart, right? We haven't gotten the true break of structure that I want, but I want to talk about what we got at the highs. What we got at the high is kind of what I call like a 3-bar reversal, right? Or inverse or head and shoulders pattern. We came up in the month of May, we made a left shoulder. We came up in the month of June, we made a head. And now in the month of July, we have potentially put in a perfect right shoulder. The only problem with this thesis is that the market has yet to break the neckline, which is 32.50, I believe. I'm watching gold very, very closely to find out, is this a fake out to go higher, which in tune, I would be ready to sell the market because that would make me believe that the market is going lower. Or is this finally gold starting to break down? If we look here, we have a high and a low, which is signifying of the dealing range between 31.24 and roughly about 35.08, right? And then we have a structural low break here at 33.16. And this is the kill box right here. The fact that we failed here, right, is very important. Now, the only reason it gives me pause to cause is because gold is a monster to the upside, right? It's just a monster. And the fact that we couldn't break these lows is very significant. So I'll be watching for a break of 33.15 and a potential break of 32.50 to support my thesis on the indices and look for shorts on the gold, on gold as a whole, right? We come down to the daily time frame, you can see that same thesis is starting to be supported, which is the simple trend line, right? We take a trend line here from the highs and we can see every single time we've come up to this particular high right here, right? We were unable to break that last high that was put in. The only problem, again, that the lows have not been able to make new lows either. But if we take a Fibonacci retracement from this low, right, of this high, right, up to this high here, and you can see right over here on Tuesday, we tapped right into the 50% of that level. That is very, very bearish, right? And the result was extremely bearish, right? Now, have we seen this movie from gold before? Absolutely, we have, right? And I'm not by any means looking to short the low on this thing. What I'm looking for is I want to see if it can continue or at least pull back, right, into these 4-hour levels that I'm going to talk about right now. we break out the top-down analysis here where I'm looking for price to attend. And you can see right above us, we have an inefficiency on the 4-hour. You could take it from 33.54. I personally like it from 33.67.5 because it's gold, right? 63.67.5 through roughly about 33.81.4. Again, we're looking for about 3.75% plus or minus on gold. If it is going to rally back up, it is not going to allow price to stay below this in wall here at 33.13.6. In wall, monthly settlement, right? All of this is super important, right, on gold. So if that's the case, I want to see the market hold that chessboard low or the previous day low and rally up toward 3.79%, right, into 34.54.9, right? From the daily fib, right, which is the next fair value level above us, we get a gap up and we hold above the previous day, the daily fib and also chessboard high. Then I'd be looking for a rally into 3.77%, about 34.744, right? So we're looking at about 122 points, 123 points worth of movement on an average. Now, if the bearish segment is to play out, meaning people start to sell gold, right? It's up too high. We got tax harvesting or whatever. They start to sell their gold so they can push the indices up temporarily, right? And then when gold gets to a level that they're like, okay, now this is fair value, introduce the bad news, right? Just hear me out, right? Introduce the bad news. Now you go back and buy gold after selling it for a loss, right? Now you start to sell off the indices so you can buy gold and send it up to its all-time highs. By no means am I saying the rally on gold is over. I'm simply saying that the time frame for gold to sell off is over the next couple weeks or couple months. It's perfect for a continuation rally on the indices and then a later failure in the next 30 or so days. And I'll explain that 30 days when we get to the catalyst. To the downside, if it's going to continue going lower, you want to see it trade up first. This 4-hour resistance zone looks really nice at 33.68.2. So I'd be looking for a pullback into about 32.41.2, which is about 3.75%. From the daily fib, if it can't get above or out of this little range that it's in, the daily fib will start to act as fair value. The equilibrium at 33.50.9 will bring us down 3.77% from that level, targeting 32.24.4 on the day. Important to note, structurally, this is how I have it broken down. We have our highs here, right, on the daily. We have our lows here at about 3,035, but right in the middle, if we were to fib out this entire sector, what you would get is the golden pocket sits right smack dab in the middle. So getting through 31.72.5 is going to be very key, or this liquidity at 31.22 is going to be very key for my analysis on gold to the bearish side over the next week or two. So we'll see how it plays out, but ultimately I wanted to cover it because it fits exactly what I'm discussing on the week. All right. Now let's move over to the volatility index. I want to talk about some things that are happening over there. Over on the volatility index, we have a perfect triple bottom at 1783. We have a daily fair value gap at 1765. We have a weekly fair value gap at 1615, and we have the ultimate bounce zone at 1349, which is the weekly demand zone, right? All the way back from the 2017. Anytime the market comes down here, you can start buying. You can start buying puts. The market's not going. The market, it will not allow the VIX to hit an all-time low. I'm convinced of it. Hasn't done it in ever, right? Ever in the history of the market, the VIX will not trade below like 10, right? So if it comes down here, I'm gonna start just blindly buying puts, right? Because eventually we're gonna get a spike, guaranteed, right? So weekly fair value gap is where I'm looking for the target to be this week at 16,195 through roughly about 15 points. We can get the VIX down there, then it'll start to give that euphoria to the market, right? As we grind higher, we got news catalysts and stuff that we'll talk about next. So if the rally is to continue, right, and VIX continues to come down, it will support my thesis on the indices going up and gold coming down while the VIX continues to bleed out, right? In preparation for tax harvesting in August or September. Who knows when they start, but they will do it at some point, right? So that's my thesis on the volatility index. I won't break down all the time frames, but you definitely need to know what's happening with the VIX, in my opinion. Now, what are the catalysts that can bring us into this week? Well, we'll start with the FOREX calendar. We drop into tomorrow, and there's a no news Monday, which again is just it's code for, grind higher or drop lower, right? All day. Tuesday, we go into Tuesday the 29th. We started off with red folder news, JOLTS job openings at 10 a.m. And this has been a big thing for the market, but it hasn't really moved the market because there hasn't really been any significant change. We also have consumer confidence report on that Tuesday as well. Going into Wednesday, we have non-farm private sector payrolls, and the advanced GDP is really important. That's a whole different video if I was to make it, which I'm probably not, but that would be a whole different video for me to explain why GDP is very important at the height of the market where we are right now. And then more importantly, we have the federal funds rate, the FOMC statement, and then Jerome Powell will be speaking at 2:30 on Wednesday, right? We move over to the next day. We know we got unemployment claims to start, but also we have core PCE before the market opens, employment cost index, and all that good red folder news. We go into Friday with more red folder news. Not only is Friday red folder news, you need to take note of the fact that Friday is August 1st. It will start the first of the month. It will begin the sentiment of what August will be. Whether that be bullish or bearish, I do not know. But I know one thing, if they rally this thing up on Friday and then we go into the weekend in a rally and everybody's euphoric, oh boy, the weekend might not be so good in regards to news. That would be the perfect scenario to trap all bulls at the absolute high, but that's just me being diabolical, right? We look at the non-farm payrolls. We got non-farm payrolls, unemployment, and ISM manufacturing at 10, followed by revised consumer sentiment, which is always fun to watch on a Friday. But based off what we've been seeing, the game plan has been from the market is basically have all of this awesome news on Friday, but do all of the rallying or dumping Monday through Thursday. So Friday, they just consolidated. So lately, Fridays have been kind of like lackluster. All right. But to the bigger news going into the next week, we have earnings, right? We have big earnings coming in. Nothing really on Monday, but Tuesday before the open, watch out for Dow Jones to go kind of crazy because we got UPS and Procter & Gamble, which are fairly large stocks inside of the Dow Jones, right? At the close, we have Visa, right? Which is going to be a mover for everybody. Everybody has Visa, right? And then on Wednesday, we have Robinhood, Microsoft, and Meta, which are going to be huge. Robinhood is slowly becoming a very large stock in the stock market. It's been rising like crazy, whether it be because of crypto or just because it's a meme stock in general. But the market cap value is rising like crazy. So you want to watch Robinhood, definitely Microsoft and Meta, and then Qualcomm as well. Going into Thursday, nothing really before the open except MasterCard, which again, it'll move the market, but not heavy. The big behemoths are going to be reporting on Thursday, however, which is Apple, Amazon, Coinbase is going to be huge, Roku. These are all large cap stocks that are going to be reporting on Thursday. Nothing going into Friday except for the energy sector. But like I said, Friday has its own news in itself. That being said, like I said, this was going to be a huge video with a lot of information. And I actually kind of proud of myself. I got it all in the 30 minutes, right? So that being said, guys, if you are interested in joining the Discord, the link to the Discord is in the description down below. If you like these videos, please make sure you tip the barber, aka hit the like and subscribe button. That being said, my name is T Hobbs. This is the top down analysis. I'll catch you guys on the next one, man. Peace.